Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Thanks for joining us on Parlance. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. The Indian markets see a sudden fall. The Nifty is trading about 90 points lower. Housing finance companies plunge.
Yes Bank posts its sharpest intraday fall since listing after RBI gives Rana Kapoor only 4 more months as MD and CEO.
Emirates is looking to take over Etihad to create the world's largest airline company, Bloomberg reports, citing sources.
Oil prices rise after Donald Trump asks OPEC member nations to cut oil prices now. You are seeing a sign of nervousness on the markets. The Nifty is falling quite sharply, led largely by some pressure for housing finance companies. Neeraj is here with a closer look, as always, on what's going on.
Yeah, I mean, it was difficult to comprehend, Harsha. By the way, it's not just the main bourses. A bunch of BFSI funds would also, their NAVs would be taking a knock today, because it's not just Yes Bank, which is now the talk of town. Yes Bank was the talk of town in the morning. I said it's the stock of the month or the stock of the day because of the cut that it had. 25% yes, but look at what's happened to Indiabulls Housing Finance. That's now down 30%. It was down 20% about 5 minutes ago. It's now down 32%. Yes Bank, Diwan Housing Finance is down about 50%. So, well, 55 as we speak. So, yeah, these guys are not seeing a floor. Now, multiple rumors doing the rounds. I'm sure Ira would have more updates there as well. But multiple rumors. By the way, guys, I heard that the rumor mills are that one of the mutual fund houses sold off an illiquid bond on a private market of one of these NBFCs at a coupon rate much higher. And so, you know, that was one, but I'm guessing there are multiple reasons out here. But frankly, there's nothing more to talk on the markets beyond this. As we speak, by the way, the Nifty is down 1.25%. When we started the show, it was down about 0.8%. So there's a sharp crack coming in, led predominantly by the financials. I would reckon the Nifty Bank and the Nifty are the principal culprits out here. But yeah, all about NBFCs, Ira, and
yeah,
major
I don't know what's
there.
happening. I don't know what's happening specifically. You guys have been speaking, but I can just point out one fundamental thing that has changed in the last couple of days. It probably doesn't explain 30-40% kind of falls by any means, but there has been a sudden jump in the short-term rates. As we all know, these guys are wholesale funded. They borrow from the market and hence lend on. So if you look at, say, a 3-month commercial paper or a 1-month commercial paper, you have seen a change in the rate scenario in the last couple of days. There has been a tightening of liquidity as well. Not sure exactly what has happened, to lead to that. But there is certainly pressure on short-term rates moving up, and that would have some bearing on NBFCs. But as I said, I don't know that it explains 30-40% kind of falls at all.
Yeah, it's just too steep, and as we said, not seeing the like a floor, because now 55, 45, 35% seems to be the order, and it's spread across. But frankly, guys, it's all about the NBFCs. The Nifty, as we speak, down 1.5%. So we are getting ready to break. We've already broken 11,100. Getting ready to break 11,000 as well, just about 67 points away, and it doesn't seem to be too far, the rate at which we are falling.
It doesn't add up. The housing finance companies are taking it on the chin. Even as we are talking about short-term rates sort of spiking up. But the trigger this morning, at least the headline news came from Yes Bank. Let's talk about that. Yes Bank plunged the most on record after RBI refused to extend Rana Kapoor's term as MD and CEO. The regulator had given Rana Kapoor 4 months or 4 more months until the end of January to step down. Anurag Joshi of Bloomberg News joins us with a little more details on sort of what caused the regulator to take this step.
So as we know that Yes Bank shares are down most on record today because the RBI has refused to extend CEO Rana Kapoor's term beyond January 2019. Now we've had a few brokerages, I mean, which have flagged this. They've cut the recommendation on Yes Bank, and they have flagged this concern that if Mr. Kapoor is exiting, that can be a challenge for the bank to raise fundraising, to do fundraising in the near future, and also the fact that that becomes a very crucial issue at the time when the RBI has been pushing lenders to raise more capital to meet the Basel III requirement. It is going to be a challenge for the bank, and basically there have also been in the run up to what happened, there were also concerns that about the asset divergence, the bad loan divergence in the bank compared with what the RBI's annual audit showed, and this is something we have been seeing replaying one after another in some of the private sector banks, where the central bank has taken a very tough stand on the leadership of these banks. And it's got a very it's come out very strongly.
Sure.
On the heads.
This is not the only one that we are seeing, but that's the Yes Bank story, and you're seeing the Sensex also fall about nearly 500 points, Ira.
All right, I think Shraddha has greater detail on what individual brokerages have said about Yes Bank this morning. Shraddha, over to you.
Yes, so Ira, overall, brokerages have said that Rana Kapoor's, the cap, RBI's cap on his term extension is a negative development for Yes Bank, given that it is a key man risk. Also, they believe that 4 months is a very short time to find a suitable replacement. And in fact, most of the analysts have said that they expect the RBI to insist on an external candidate rather than internal one, which raises questions over the business continuity aspects. Additionally, they have said that it also creates uncertainty about capital raising plans for the bank, which could lead to some deferral and impact growth. Now, IDFC Securities has cut the target price on Yes Bank from 350 to 230 and downgraded the stock to underperform. They've said that Rana Kapoor's absence could slow down loan and fee income growth, both of which will have an impact in its valuations. In fact, they've also said that it can impact the bank's ability to raise high net worth deposits. Macquarie has said that it is Mr. Rajat Monga who could be the front runner for the role, and they've also said that Mr. Pranay Mondal, who's the business head for retail banking and business banking, could be considered. They have continued to maintain an outperformance target price of 425. City Research, on the other hand, has again downgraded the stock to sell and cut the target price from 440 to 270, a sharp cut over there, because they believe that there was a premium that was attached to the stock because of Rana Kapoor. They've said that it is likely that the bank will have to defer its capital raising plans, and that could impact growth. And finally, you have Edelweiss, which has maintained a buy, but again trimmed its target price from 453 to 375. They've also pruned the target price to book multiple to 2.5 times. Nevertheless, they've said that they believe that the bank has a strong foundation with a new lender can build on, so they're betting on the bank's franchise, but target price cuts across the board as far as analysts are concerned.
All right, Shraddha, thanks for that. The third element to this story, and perhaps one of the reasons why we've seen such a steep cut on Yes Bank is because there is uncertainty on how things shape up from here. The story at Yes Bank is very different from the story that has played out at Axis Bank. There it was a question of a professional manager, her term not being renewed, so a new professional manager had to be brought in place, and that transition is already well underway. In Yes Bank's case, remember, Rana Kapoor is the promoter of the bank. He and his family still hold about 10%, and if you go through the articles of association of the bank, which me and Vishwanath Nair, my colleague, have done over the last 24 hours or so, they tell you a couple of things. One, he is listed as an Indian partner. Two, at present, he has a non-rotational seat on the board of Yes Bank by virtue of his position as an Indian partner. So that means that while he moves out from the MD and CEO role on the 31st of January 2019, there is a question whether he stays on the board or not. Going by the articles of association, he does stay on the board. If he does stay on the board, then will the transition at Yes Bank be smooth or not? Will there be ambiguity on who is actually leading the bank? Because remember, Rana Kapoor is the founder of this bank and has run it for many, many years. But then the other question is, will the RBI allow him to continue as a director? Should the RBI have found that he is not fit and proper to be MD and CEO, then the same yardstick applies to his directorship on the board of Yes Bank. There has been no communication from the Reserve Bank of India on what stance they have taken. The only thing that the bank has said is that he has been asked asked or allowed to continue only till the end of January. They have not specified whether any concerns have been raised about his directorship on the board of Yes Bank or not. So that is the second round of uncertainty around Yes Bank that is continuing. Finally, just want to make the point that this is a bank that over the last couple of quarters in particular has been growing very, very rapidly. And it's a bank which is still fairly reliant on wholesale fundings. So the mood around the bank is fairly critical right now at this point in time. More clarity is awaited on how this transition takes place. Is it a transition away from Rana Kapoor, the CEO? Is it also a transition away from Rana Kapoor, the director? And the final specter of uncertainty out there is whether this will re-spark a battle between two shareholders, Rana Kapoor and late Ashok Kapoor, whose family in the past has had a bit of a run-in with Rana Kapoor on their rights in the bank. So lots of stories playing out here, not just that there is a management transition upcoming.
Well, that's Yes Bank for you. That stock is down significantly, but the broader story is what's going on in the markets. As we speak, the Sensex is closing in on nearly losing 400 points in trade today. The Nifty is down about 166 points. You are seeing most of the stocks across the board losing ground, particularly led by the banking stocks. The bank Nifty is also about 2.5% lower at this juncture. We have some more, and there hasn't been a credible reason for what's caused this sudden sharp fall across the board, and that's in the mid-cap index for you. We'll come back and explain to you what really is going on in the markets. But there's also another piece of news from the banking space, and this has got to do with appointments of chief executives at 10 public sector banks that has happened with immediate effect. 5 of the top officials appointed are from State Bank of India. That's Padmaja Chundru, Pakiri Sami, Pallav Mahapatra, Mrityunjay Mahapatra and Karnam Shekhar of State Bank of India have been appointed at Indian Bank, Andhra Bank, Central Bank of India, Syndicate Bank and Dena Bank respectively. Additionally, SS Mallikarjun Rao from Syndicate Bank has been appointed as the chief of Allahabad Bank, AK Goyal from Union Bank of India as the UCO Bank chief, and Hari Shankar from Allahabad Bank as the head of Punjab Sindh Bank and bank chief at Rajiv from Indian Bank of Maharashtra. He's moved on to Bank of Maharashtra. Lastly, AK Pradhan, who's currently the Executive Director at Union Bank of India, has been promoted as Managing Director and CEO. Bunch of changes in the banking space. The public sector banks finally getting top heads.
Newsflash on the screen, a clarification from Demand Housing that they have not defaulted on any commercial paper obligations. That newsflash coming in from Bloomberg. Perhaps someone had reached out to them for a clarification, or there was some conversation in the market to which they are responding. Stock still down 50% right now. Keeping a track of that, but let's keep getting you other news as well. The Karnataka Pollution Control Board wants to shut down the Graphite India plant located in Bengaluru. The environment watchdog, which recently conducted an inspection on the plant, will now submit its report to the National Green Tribunal. The company, meanwhile, says it's confident that the plant complies with all emission norms. So badly will it? How badly will it impact the company? Let's go across to Nikki Mirchandani. Nikki.
Thanks, Ira. It's not the first time that this has happened. That is, back in 2012, the Pollution Board had issued some observation regarding to the Bangalore plant with regard to the pollution issue. 2013, however, saw the Karnataka State Appellate Authority ruling in the favor of the company. Having said that, the company Graphite India, in its clarification put out yesterday over this media news article, which was reported by Times of India, said that they have rationalized operation despite positive ruling in 2013, and they have decommissioned the extrusion and the old baking furnace. Now, this entire graphite electrode making process is a 6-step process, and 5th we have graphitization. That's where Bangalore unit comes in, where this particular steps take place. And if you look at the total production capacity in order to assess the kind of impact that this judgment could have in case of the adverse impact if the plant is shut down, it's a 80 MTPA domestic capacity that graphite currently has, and Bengaluru currently sits at 13,000 MTPA kind of in capacity. What brokerages make out of it, Centrum says that the company can ramp up the graphitization process or can shift the process to other units. This would lead to a marginal increase in the cost pressures for the company, particularly the power cost will shoot up. However, the future monetization of this potential land bank could lead to 600 crore kind of a cash flow situation, which is a great positive for the company, given that the company doesn't doesn't see a future outlook from this land. Also, Jeffries pretty much reiterates the same thing, and it says that even in the case of shutdown, this would impact the overall EBITDA to an extent of 0.5%, which is quite a minuscule development for that company.
Nikki, thanks for that. Keeping an eye on where the market is at this juncture, the Sensex, as we speak, is down about 350 points. The Nifty is down about 1.25%. Bank stocks across the board are taking it on the chin at this juncture. More importantly, you are seeing the mid-caps crack as well. You know, I'm looking at some of the mid-cap counters, and most of them are down about 3.5%. We'll take a closer look at what's going on and what's caused this sharp fall. Meanwhile, there's a story on administered gas pricing that will be revised from the beginning of next month. And a survey that conducted by Bloomberg Quint among 14 analysts and industry experts, they're factoring in a hike, which takes prices to a 3-year high. Soumit Sarkar is standing by with some details.
So the prices of domestically produced gas in India is fixed by the government and revised every 6 months. Now, the poll conducted by Bloomberg Quint suggests that the prices could be hiked by around 11% to close to $3.39 per MMBTU, that is million British thermal unit. Now, this will be the third consecutive hike that the analysts are expecting, and this hike will take the prices to near its 3-year high. However, the gas prices will be 40% lower compared to the earlier highs, where it was trading at around $5.05 per MMBTU. So, whom will it benefit the most? Well, it will benefit all the oil explorers, that is ONGC, Oil India, Reliance Industries, Vedanta and HOEC. But of these 5 companies, it will benefit ONGC and Oil India the most because they produce and sell nearly 80% of the gas in India. So what we have tried to do is we have tried to see how much it will benefit these 2 companies. So we are assuming that the production numbers and the sales number will be the same that the company did in the second half of financial year 2018. As the production number will be the same, the cost of production will also be the same, and we are also assuming that the rupee conversion would be same and the company would pay tax at the similar rate. So if the new rate would have been applicable, that is $3.39 per MMBTU, the company would have seen an incremental profit before tax of close to 1,100 crore rupees for ONGC and close to 130 crore rupees for Oil India. Now that would have translated into an incremental profit after tax of close to 784 rupees for ONGC and 99 crore rupees for Oil India, which means that EPS would have been higher by close to 0.61 rupees for ONGC and 0.9 rupees for Oil India, which means an 11% hike in the gas prices would have lifted ONGC's EPS by around 7% and Oil India's EPS by close to 6%. Now, whom does it impact the most? Well, it will impact the urea and petrochemical manufacturers because natural gas is used as a feedstock for these 2 things and the cost of production will now be higher. It will also impact the CNG and PNG users and will also impact the margins of power sector companies and sponge iron industries because it is used for energy generation in these 2 sectors.
All right, thanks so much for that. Oil prices retreated after the US President Donald Trump resumed his criticism of OPEC, saying that the cartel must get prices down now as the global benchmark crude flirted with $80 a barrel. Earlier this week, Bloomberg's Will Kennedy reported.
Donald Trump's tweets are becoming a regular part of every OPEC meeting. He seems to have it in his diary and wants to send out a tweet just before they meet to tell him his point of view. For the Saudis, they're walking a difficult line right now. They don't want to antagonize the American president too much and risk action, possible legislative action against OPEC in the US Congress. However, as we reported this week, there's a recognition in Riyadh that prices may well have to go higher from here, and that's really down to one reason: Iran. Iran sanctions are really starting to bite. Exports have fallen 35% already, and they don't even take effect until November. And that oil has to be replaced. Saudi's replaced a fair bit of it. Its output has jumped. Russian output is jumping, but it may not be enough to prevent a little uptick.
Okay, as we speak, you're seeing some recovery on the markets at this juncture. The Sensex, the Nifty has reclaimed the 11,000 mark. The Sensex is up about, or rather down about 175. Marginal retracement. We'll try and get you a market voice to get a sense of what's going on in the market today. The mid-cap index, also bring that up on the screen to give you a sense of what's going on, is down nearly 2.5%, nearly 3% at this juncture. Let's wait and get a market voice for you. But meanwhile, there's an interesting story developed in the global aviation space. Dubai's flagship airline Emirates is looking to take over unprofitable neighbor Etihad. According to what sources have told Bloomberg, talks are at a preliminary stage, but if the deal concludes, it would create the world's largest carrier by passenger traffic. Ben Katz reports.
There's been a lot of speculation as to the future of Etihad. Etihad, which is based in Abu Dhabi, has been through some troubling times in the last couple of years, especially with a failed strategy to buy into European carriers like Alitalia and Air Berlin that have since gone bankrupt. That has caused it to lose billions in profits and has kind of opened up this potential for Emirates and Etihad to join and create what would, as you say, become the biggest airline passenger in the world. It's very preliminary at this stage. As we understand it, no bankers, for example, have been included into any formal discussions. This is something that's happening, as we understand it, at a political level. You need to remember, of course, that both Emirates and Etihad are operated, in separate Emirates. So you have in Abu Dhabi, Etihad, you have in Dubai, Emirates, which have until now been competitors, essentially, both competing for hub traffic through their own network. What that means, essentially, we need the political go-ahead as well as the commercial. I guess it has to make sense commercially for it to move ahead. But we're hearing that it's picking up pace.
All right, just getting back to what's been playing out in the market, Dhananjay Sinha, head of research at MK Global, joins us on the phone line. Good afternoon, sir. What can you tell us about what led to this market plunge? What's going on?
So I think we've already had the news on Yes Bank yesterday, wherein Mr. Kapoor has not been given extension. So I think there has been a concern on the market with respect to the slippages that can happen and the variation on NPAs that can happen after he exits. So this is a bank which earlier was under a lot of cloud of worries because of...
Mr. Sinha, I'm just going to... Mr. Sinha, I'm just interrupting you for 1 minute because we have Kapil Vadhavan of Diwan Housing joining us on the phone line. Kapil, afternoon, thanks for joining us. Do you have a sense of what's happening, what's pushing down your stock by almost 50% at one point?
I think the market rumor mills are pushing down, all and sundry in the market, and specifically financials. And we've seen that not just with our counter, but with other housing finance companies as well. So I guess there is a complete disregard for fundamentals and more focus on certain other contagion effects in the marketplace.
Kapil, do you have any commercial paper due coming up for renewal soon, coming up for repayment soon?
No, absolutely not. I mean, I think one thing which I should tell you is that we are sitting on extremely strong liquidity position. So we have a very small commercial paper, which obviously has already been factored into our ALM position and vis-a-vis our liquidity. So yes, I mean it's business as usual as far as we are concerned, or at least it was till this morning.
Okay, can you explain to us when you mean business as usual? Are there any plans on the anvil that you've gone back on? Was there any communication to the market of what you were planning? What's caused this nervousness?
I have honestly, it has actually taken us by surprise as well. Now, obviously, there was no communication. We all know that 2 weeks ago, there was a lot of, panic around, or rather the panic has been continuing since the last 2 weeks, on one of the other, non-banking entities in the marketplace. And possibly, all these rumor mills have actually led to what we are seeing today in the market.
Kapil, you borrow obviously a fair amount from the wholesale markets. In the last week or 10 days, referring to the incident that you were talking about, has there been any reason to believe that you're finding it tougher to raise short-term financing, or that the rates at which you're raising has gone up?
Let me put it straight that, DHFL has probably one of the best ALCO positions in the market. Our total short-term borrowings is extremely small vis-a-vis our total mid-term to long-term papers that we issue and the money that we borrow from the banking system. The rates obviously have spiked up in general, and obviously we are all market participants, so we have to deal with the market headwinds accordingly. But nothing to suggest that it has got anything to do with the fundamentals of the company, which continue to be extremely strong.
And you have no reason to believe that there's any disruption in your bank lines of funding?
No, absolutely not. I think we are extremely well diversified in our funding portfolio, right from sell down of portfolios to banking lines to capital markets to fixed deposits. So it's a pretty well diversified funding pool, and also NHB refinance.
Kapil, thank you for joining us and giving us those clarifications. I have Ashwini Huda from Indiabulls Housing Finance also joining us on the phone line. Mr. Huda, thank you so much for taking our call. Your stock is down about 10.5% as we speak. Can you tell us what's the cause of this nervousness in your company or in your company stock and the housing finance space? Do you have any explanation?
So clearly, I think there has been some fear mongering or shorting of at the marketplace for a company like Indiabulls Housing Finance, which is the most liquid balance sheet in the entire country. We are the only housing finance company or non-bank who maintains 20% of the balance sheet in form of cash invested in T+1 basis in mutual fund liquid schemes. So we have in fact been a beneficiary of liquidity crisis in the market in the past and has been one of the factors which led to our rating upgrades. So clearly, there is no impact whatsoever. If you see our recent borrowings, short-term borrowings have been at 7.7%. Long-term 5-year borrowing just 10 days back has been 8.85%, 5 and 10-year borrowings. So these are the best rates that AAA by international rating agency S&P and Moody's local company CRISIL and ICRA can borrow from the market, and we've been borrowing at that. And I believe with this kind of a liquidity of more than 20,000 crore of cash on balance sheet, we're the last man standing. 6 months, if we don't borrow a single rupee, we should be able to pay back all our liabilities, disburse all our home loans, and still left with 25% margin cushion.
Okay, so as I understand, you're saying that you have no liquidity constraints, you have no capital problem at all. What then do you believe is causing this nervousness across the housing finance space? Do you have any inkling of what's going on?
So, I think it's a panic reaction to one large NBFC having defaulted, 2 weeks back, which led to some of the mutual funds selling some bonds at distress for some other companies. But if you ask me, that's a normal thing. I mean, if you buy a security at 10% and you sell at 11%, because you have redemption pressure because you had exposure to some security which went in default. That's a very normal market practice. So why market should react, even I am confused. As long as no housing finance company has defaulted on its commitment, which I believe is the case, and as long as individual companies are very well liquid and capitalized, there should not be any concern from investors whatsoever.
Okay. Mr. Huda, thank you so much for joining us. That's the view from Indiabulls Housing Finance. You also heard from the Divan Housing Finance saying that, look, we have no idea and fundamentals haven't changed, that there is no capital problem. Both those stocks seem to be recovering a wee bit, but yet we're talking Divan Housing down 40% or 42% as we speak, and Indiabulls down about 9.5%. We still have Dhananjay Sinha on the line. Mr. Sinha, thank you for waiting by. Can you make sense of what's going on in the market today?
So I think, what is important to understand that there is a string of events that has happened recently, including the IMFS thing, the Yes Bank concern, and other measures that RBI has taken with respect to other banks. So I think clearly with the financial sector, I think there is a cloud of concern that has happened even outside of the public sector bank. So I think that is what seemed to be happening. Apart from that, it is true that the rising rate scenario has impacted the finances of the banks or lenders who have large ALM mismatches, and typically for the housing finance companies, what we have learned that earlier on, when the rates are actually falling between 2015 to 16, they made large amount of ROAs on the back of running large ALM mismatches. So the unwinding of that is also sort of impacting the stock prices of most of the PSU, most of the housing lending lenders. So be it LIC Housing, PNB Housing, or any other housing companies that we talk about. So there is a clear concern on rising rates impacting the ALM and also the margins and the ROAs of NBFCs, especially the asset-backed NBFCs and mortgage-backed NBFCs. So that is clearly happening. And I think within the banking sector also, the Yes Bank episode is actually reviving the concern on slippages or diversion of NPA declared and NPAs that will come about after audit and stuff. So I think clearly when the RBI is taking aggressive actions, clearly something is beyond what people know of what banks are showing. Yeah.
Fair. Okay, Mr. Sinha, thank you so much for joining us and giving us those views. That's Dhananjay Sinha. Lakshmi Iyer from Kotak Mutual Fund now joins us on the phone line. Lakshmi, thanks for taking our call. Okay, we seem to have lost it just a bit. We'll try and repatch that line. But here's the story of the markets for you. We've spoken to both the housing finance companies. That's Diwan Housing Finance. That's was down nearly 50% earlier this morning. Retraced some of that lost ground. It's still trading about 40-45% in the red. The management of Diwan Housing Finance explained to us just a short while ago, saying that there has been absolutely no change in their position from a liquidity standpoint or their requirement for capital standpoint. The fundamentals of the company, Kapil Vadhavan on record to say that haven't changed at all. And he's equally surprised by the reaction on the street to the stock. Similar view came in from Indiabulls Housing Finance, the management on record explaining to us, saying that there is no reason for this panic because they have absolutely no liquidity concerns either. Those are the two housing finance stocks that's on the screen and the management views that we got for you. Lakshmi Iyer from Kotak Mutual Fund now joins us on the phone line. Lakshmi, two events. One, the kind of sell-off that we're seeing in housing finance companies. What have we made of it? And the spike in the short-term rate, what's causing this nervousness?
It seems to be like a chicken or egg story because if you honestly ask me what answers or what really justifies this kind of a knee-jerk market fall, it's very difficult to pinpoint any particular precise reason. In fact, today, just to share with you, the short-term bond yields, especially in the CPCD segment, were down by about 5-7 basis points because mutual funds are sitting quite a flush with liquidity. The NBFC and the HFC bond yields have seen a rise over the last 2 weeks, where we have seen yields go up by almost 50 to 60, 70 basis points, and it is not something which has happened only today. So I don't really have an answer as to what explains the fall today.
Okay. Lakshmi, just one question. I know the Yes Bank episode is played out before us, and therefore you're seeing quite a bit of nervousness or selling off on that stock. The other aspect that Dhananjay was mentioning, or another expert that we speak to just a short while ago was explaining, was the default of IL&FS and the repercussions. I know we spoke to you a week ago when you said it didn't have material impact on mutual fund holdings. Do you have a slightly nuanced view at this juncture on the default and the consequences?
So again, the same thing is that the entities within IL&FS, some of their subsidiaries have made delays on some intercorporate deposit payments, as we read and understand. In the mutual funds, I would still maintain that out of the total debt, which is pegged in the band of about 90,000 crores to a lakh crore, mutual fund holdings are under 5,000 crores spread across various maturities. So it's important, yes, that acted as a catalyst for NBFC yields to go up. And if this gets perpetuated with, yesterday we saw the Yes Bank news. So, it's, I think, a series of events which are leading to bond yields going up, specifically in the NBFC and the HFC segment. And if the dust does not settle down too soon, we could see the yields continue to go up.
Okay, Lakshmi, thanks so much for giving us that. Short-term yields is certainly a problem. Harsha just, got on a quick call with two rating analysts, NBFC or sort of financial sector rating analysts. And I think both have said that they have no information of any default that has happened. So I know, as Neeraj said, that there is some talk, unsubstantiated rumor doing the rounds of a CP default, but at least two rating analysts of two of the largest agencies that I've spoken to have said that there has not been any default event that they are aware of.
Interesting that pull up the Nifty and the Sensex at this juncture, just get a sense of where markets are. Two things have happened since the beginning of the show in the last 30 minutes. The Nifty has recovered a wee bit. It's now down about 90 points as we speak. The same case with the Sensex. The Bank Nifty, however, is pretty much where it was at least half hour ago, 1.5% down on the Bank Nifty. You are seeing bank stocks across the board take it on the chin, particularly the housing finance companies. Diwan Housing was leading the pack down nearly nearly 50%. Half hour ago, it's down about 40-45%. Indiabulls Housing Finance as well, about 10%. Remember, both these managements coming on record to say, listen, there hasn't been much change from our point of view. We're adequately capitalized. The liquidity situation is pretty comfortable, and there has been no default from our standpoint. We leave it there on the show, but this is the market situation for you. The weakness seems to continue. Housing finance companies leading the pack.
That's all the time we have on Power Lunch. Thanks.
Thanks for watching.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.